Happy Monday, traders. It's 8:01 a.m. Chicago time on the 29th of November, 2021. This is episode number 2124. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm going to start out by saying hopefully you had a happy Thanksgiving for those who observed. Hopefully you stayed out of trouble on Friday. Here we are looking at a market that is enjoying a bit of a bounce. You can see that we're in a risk-on sentiment. We have what is a P-shaped profile pretty much across the board. Market quickly moved away from its opening price and has been balancing here. In any case, we're seeing a recoil from Friday's sell-off, which happened on on a holiday day. Although Friday is a valid trading day, even though it's half a day, it's valid because the underlying equities were open for half that day. Friday's volume in the S&P was 1.3 million for half a day. We would have hit somewhere around 2.5 million, 2.4 million for the day. That makes it a very heavy volume day. It's about recently that's about 3 times the usual volume. So we had not only did we have a large range to contend with, the volume was actually there to get the job done. So we could see that the big recoil or rebound was in crude. Crude was down about 11% on Friday. From its high, got down to, I believe, 67 or so, and has been recovering. What's driving this apparently is, yes, the Omicron variant is super contagious or whatever. But what they're finding over time here is that the symptoms or the effect is not as strong. It seems to be a virus that's a mutation that's tuned for transmission, but not so much for damage. So, the markets are anticipating that this is not likely to cause lockdowns or shutdowns. Although some countries like Israel and a couple of others have completely shut down travel for 14 days. It's not as bad as expected. So the market is pricing that in, and we're seeing a push higher. I want to remind you that we still have some serious macroeconomic overhangs, including the U.S. Debt ceiling, the U.S. budget, and a couple of others. Supply chain is still not up to speed. Containers are moving through LA and on the Pacific side of the U.S., but they're not really back to where prices can get some relief. So inflation is still in play here. In terms of what's on deck for today, we have pending home sales from the Realtors Association at 10 a.m. Eastern, Fed's Williams and Dallas Fed at 10:30, President Lagarde, ECB President Lagarde at 12:15 Eastern, Fed's Clarita at 1 p.m., Fed's Williams at 3, and Fed's Chair Powell at 3:05. Going to be paying attention to that. Fed's Bowman at 5:05. Unemployment rate out of Japan at 6:30 p.m. this evening, and so on and so forth. MBS manufacturing PMI out of China, which is a mover, at 8 p.m. if you trade the Asian session. The big number that was released today was the German inflation rate year-on-year prelim came in higher than expected, 5.2% versus 5% consensus. The prior is 4.5%, and that's how it rolls. For the rest of the week, since it is Monday, the big figures are tomorrow's inflation rate out of the Eurozone expected at 4.5%. We have Fed's Chair Powell testifying at 10 a.m. Eastern. 10 a.m. Eastern. We have the Kaikshen manufacturing PMI out of China at 8:45 p.m. Eastern. This is Tuesday. Wednesday, we have ADP, U.S. ADP employment change at 8:15 Eastern. We have ISM Manufacturing PMI at 10. So Wednesday, we have ADP and ISM. Thursday, we have consumer confidence out of Japan. And on Friday, we have non-farm payrolls and the unemployment rate, as well as ISM non-manufacturing. So this week on the calendar is relatively busy. Okay, let's shift our focus to the S&P. By the way, you can see crypto's taking a really nice bounce here. On the S&P, again, a P-shaped profile. We've traded 422,000 contracts so far, and the overnight inventory is 100% long. There's an interesting anomaly if you look at the CME Group site for the closing on Friday. The close was actually a lot lower on Friday. It was the market closed at 45.79 even, 45.79 even, but settlement was 45.95.75. So settlement was almost 20 points higher, it's approximately 16.75 points, or exactly 16.75 points higher than the close. This is causing these numbers to be a bit muted. The S&P 500 shows that it's up 110 basis points, but actually, if you compare it to the prior close, you need to add 20 points to that. Same with the Dow, NASDAQ, Russell. Very interesting to note. But in either case, we've traded 423,000 contracts, which is a lot higher than the expected value of about 160,000 contracts. The overnight inventory is 100% long. The market skewed long because it closed. It closed at the low on Friday. Very, very weak close on Friday. The expectation would be to come in and see it go lower, but this is a news-driven event. Now, here's the thing. It looks to me, looking back, the SOC for this news was Friday's open. As soon as it opened, it immediately sold off. That SOC price is 47.07. 47.07. So that's where the market was auctioning when the news hit. This is a significant number to have on your charts because we're likely to go and tag it. If the news is not lasting, that's where we resume where we were on the prior session. So 47.07 is key up here. We've had 60.75 points of range, the point of control of 46.30, and the high is 46.49.50, the low 45.88.75. So that's where that stands. I know that's a lot to digest, but it's important to know this. Remember, the gray box up here, this box is important in that it's providing statistical ranges and rotations for the S&P. I want you to ignore this for a second, as I did not have a chance to update these. The rotations are likely higher. I'm not sure. I have to get that done as soon as the market's, as soon as I end this trader bite. But the ranges are correct. Crude, the expected range for the day is 1.7 points, higher than 1.6 the prior. 350 in the Dow, that is in line. The Russell has expanded from 42 points of range to 44. The NASDAQ is the same, 220 points, and the ES is 46 points of range expected. Statistically speaking, that's looking back 252 days or 1 year of trading, and we're looking at basically a value area of where prices are likely to go to. So these are considered what's normal. It could be a lot less than that, but anything above that is likely to is basically where the rubber band or the statistics become stretched, and we need to pay attention to that. I've done a lot of public webinars and stuff about statistics. It's very important to understand statistically what your product is. So let's move into our review segment real quick here. We're reviewing a day that is shortened. The chart is really busy here. On a 4-tick Renko, I still haven't gone back to 2-tick Renkos, which is what I traditionally use for the S&P, and I'm squishing this a lot. The chart is extremely busy. You can see that we opened on Friday, attempted to push higher on a gap down, and we could not. The prior low is 49, and this is going to be important for today. 49 up here is the prior low, and we immediately moved away from this. The most clear structured trade is right here at 46.18, a pullback to the mid and the VWAP after running through, and the expectation is it would likely take out the initial balance low. So looking back, reviewing the day bar by bar, that was the first, other than volatility-based setups or order flow-based setups. That setup there is the key structured setup. Look for a turn around this 46.19, between 46.17 and 19. Look for a turn there, and look to target 46.94 for 20 points, 25 points of range. Look for a breach of the initial balance low, which we got here. And then it's a consolidation and some whipsawing. But Friday really didn't breach and hold the mid or the VWAP. It was a sell-only day. It's not a day where I would have had any long setups or would have wanted to take any long setups. So we end up very, very quiet here into the close, or very muted in range into the close, but very frenzied. You could see that this, from here to here, this was 1 minute of data, 1 minute of trading that took place right here. Just chopping around, forming the point of control Friday around the century figure. 4,600 is where the point of control is on Friday, and we are above it. We're trading up here at 46.44. So we are trading right up against Friday's high, and we may be opening in an open auction out of range, or we may be opening out of range. So it's important today to sit steady and wait to see what it does. If the other thing you should observe about Friday is we've had all this selling, so the big structure is this. That's basically what we've got. Those are the main zigzags with the noise taken out, basically. And during this structure, you look at the delta, and the delta was actually positive through this. It was positive, and it got slightly negative on the close. This means that as the bid was being hit, as prices were moving through, there was lifting that was going on. There was some buying going on, and those could come in the form of hedges. So a lot of participants had the expectation that these prices ought to be hedged, or may have been initiating buys or covering shorts on the way down. All of those, whether they're covering shorts by buying, whether they're initiating longs, or whether they're hedging, it doesn't really matter. All of those have a positive bias or have a long bias. So if I'm short and I expect the market to continue to crater, I'm not going to cover. I'm not going to go and lift the offer. And you would think that these sellers would be hitting the bid hard, and therefore the delta would be negative, moving with price, and it was not. And it's a bit of a clue. It's not a very strong clue. I wouldn't lean on that. I wouldn't sit here and go delta divergence, buy it, because you would have gotten your butt handed to you on Friday morning, because the delta was actually positive throughout the session. But it just gives you an idea of what the temperament was in terms of the aggressor versus price. When we see price fall, we want to see an aggressor selling into the day. Okay, and so that's where that stands. Looking at what we've done since, here we are. We opened up right down here. We basically had an open drive on the open today. We opened, we ticked down just a couple ticks, and immediately pushed up. So we opened at 45.89. The low is 45.8875. So one tick, and we had a very quick drive back up. The Nasdaq had a lot of gaps in it. It was extremely thin. I watched the trade. I tried to see if there was going to be a lot of selling, which is what I expected coming in here. But because the S&P, and this is important, because the S&P opened inside of Friday's range, above Friday's close, instead of gapping down, there was immediately a buying skew to the market. On news like we had, the expectation is we close below the low and we open and either drive down or we gap lower, and we didn't have any of that. We opened in range and we immediately pushed back up. This is quite bullish. So from the get-go, we cross off any potential setups for the short side, and we're looking long, and it's likely to continue to drift higher into the 49 areas. So we'll see how that materializes. 49, 56, and so on and so forth. So that's how we're set up. We're set up as basically a completely balanced overnight session, except for this portion here, which forms this what we call P shape, which is short covering. So we have balance here, and we are stalking the high end of balance. We had VWAP and the overnight point of control on top of each other, and we've moved away. This is relatively bullish. Looking at the big picture, and I know this is getting long in the tooth here, but I'm catching up after a break. There's a lot that has happened. We have formed a really nice balance point. We remained above that balance point 2 weeks ago in that very tight range. This trade from approximately November 15th onwards has been just really difficult, in my opinion. You can see up, down, or down, up, down, up, down in terms of where the close is. Very choppy. We formed this big point of control at 46.89. We carry that forward into last week. Last week ended up accepting both of these ranges, both of these points of control, this one and this one, in that it formed this balance right here. And once it broke through the balance here at 49 or so, we ended up with a gap on Friday. So we have a gap open right here that we're likely to fill in. And we finished quite bearish with, as you see here, a fair amount of volume. So what we have from last week is a very weak high at a new all-time high of 47.40.50 in the day session. So a very weak high, check. We have a balanced middle, check. So that's your second distribution there. And then we have this low volume zone that we're in the middle of, and we have a balanced low. So we have very clear distributions to work with for today. So we're looking at 4,700, 46.50, 49, and then below that is where we ended up on Friday. So what we've done is we've taken back 3 weeks worth of range last week. And so I'm expecting, so we can project this week to be relatively active. It's likely to be, given the economic events, we're expecting this to be a relatively busy week, a good week to pay attention as November ends. So we have month end on we have month end tomorrow, and we go into December, the last day, the last month of the year. Generally, the market skews to the buy side. And the shorts are likely to get crushed today, in my opinion. Unless we really aggressively sell off this morning, I'm going to be favoring the long side. Okay? I know that's a lot to go through, but you can see that there's a lot going on here. We have a gap. We're below the 20 simple moving average. This is an RTH only pit session chart, which means it correlates with the cash market. And we have given up some really important balance areas above, and we are likely to get to come back and have those behave like a magnet. So as I shift this forward, you can see that the point of control again is at 73.50. That point of control has been there for approximately the entire month. From the first day of the month onwards, we have had this micro composite with a point of control at 73. So just above 46.50, 73.50, 80, 90, and then 4,700 are the key areas in play. And if we clear those, if we clear the 4,700, we're looking at all-time highs. So judge your trades according to that. Let's take a look at what's expected for today. I'm not going to go through the overview because you can imagine that it all just looks pretty beat up right now. One second. I need to shift this chart. There's just a lot of structure to deal with here. So I'm going to allow for a lot less space to draw. Well, let's get into this. I'm going to try to be as mindful of the price scale as possible. So here we are. Boom. Boom. We broke to the upside just now. With 100% inventory, we've pushed the 49.50 against the 49. We have 49 and 55 as key lows. Just ahead, we're right up against it. I'm expecting a small response to the sell side this morning, and then I'm expecting this thing to squeeze right through. We will be pushing 2 Vol Sigma on the close. That's a closing level, and it represents 95.4% of the data set, or 2 sigmas or 2 standard deviations. But overall, because of the discrepancy between the prior settle and the closing price, I'm not really clear on what the market's likely to do. I mean, it could end up at 3 sigmas up above at 46.92, but I'm expecting it to struggle back, to push back into what we had last week, and to get back towards 46.73. So 73.50 is likely to be a magnet here before it sells off into the close, or if it rises immediately. So I'm looking for a pullback into the 40.30 area. It's actually pulling back already, but then I'm looking for it to push higher. Here's the thing. If it does not do that, if it fails to do that, if it pushes the overnight high into 55, 56, let's say, and we see an impulse down back into the open, then we are likely to target where we opened on Friday back to 46.28, and then 46.19 is the next high volume node here. 19 right there. Remember the 19.20. It's very common that we go and test at 19.20, and then we'll pull back. We're likely to pull back to test out the stability of this drive. We're likely to check the stability of this drive before the next move is decided on. So what is important here? So what's important is 55. We have 55.67. The big one is 73.50 right here. 73.50 is the balance of the entire month of November. 73.50, and then above there we have 80, 90, and why they're 10 points apart. 90, and then the key area to test will be the double O. Above the double O, as I said, we are likely to go and challenge the all-time high. So above the double O, we're looking at ATH, all-time highs. And I want to remind you that this whole thing started from 47.07. 47.07, right above the double O, puts us in the upper distribution, and we're likely to challenge the all-time high. Every time we've had a sell-off like this, we've ended up pushing all-time highs. So that's to the upside. To the downside, we have the 19. We have a wide gap area here between the 19 and about 4,600, right down here, the double O, which was Friday's point of control. There's some minor levels, 12 and so on down here, but it has much more room to fall, and the push up is likely to be a slow squeeze. Good luck, everyone, and I'll catch you tomorrow morning. Take care.